All right, hey everybody, this is Ray, the Straight Uchiha, um, in the group. So this would be my trade idea 7-5 because today is Monday, the market is closed. All right. And before we get started, you see the disclaimer, read that, before we move on and stuff like that. Boom. All right. All right. So now you should be able to see the chart. So my watch list for this week is going to be, let's see, 1, 2, 3, 4, 5, 6, 7, 8. It looks like 8. All right. And then you can also, keep an eye on the things from last week's watch list, right? Because some of those have, a lot of those had 2 1s on a month. So, you know what I'm saying? You can still be watching them. I just don't want to overwhelm y'all with too much, but it's a lot that you want to watch as far as like what that stock is doing, on the monthly. So just a quick overview of what last week's watch list was. It was, Uber, Disney, VRM, Trip, DraftKings, Etsy, Airbnb, QCOM, and C. So again, you can go back and watch that video and just, have those on the month, had the previous, months high and low mark just to keep track of it, just in case, it wasn't calls, it was puts or whatever. No bias. We want to play both sides. We want to take, what the market gives us and things of that nature. All right. So the first one we have is pins. All right. So the reason why I'm looking at pins this week is mostly because it looks like it may have a pivot machine gun to the downside. Right. All right. So what is a pivot machine gun? Again, a pivot is an obvious place where people put their stop loss. All right. When you're long, you put your stop loss at the bottom of the candle. All right. Most people who are long put their stop loss at the bottoms of the candle. The reason being is because they're expecting the price to go up. It gives price the room to breathe, without actually hitting their stop loss and stopping them out, because you got to give price room to breathe, but you don't want to give it too much room to breathe because we want to practice good risk management. All right. So basically, as you can see, it has a bunch of pivots. You know what a pivot is. It's an obvious place where people put their stop loss. For people that's long, it's at the bottom of the candle. For people who are shorting or bearish, it's at the tops of the candle. All right. Now, a pivot machine gun is 5 or more pivots that are close and tight together. All right. And basically what happens usually with a pivot machine gun is once it hits that first pivot and stops those people out, it's off to the next pivot. And then it just blows through the pivots very fast. And that's why pins has a pivot machine gun. As you can see, all these pivots, even if I, kind of raise it up a little bit, make it disappear, you can kind of see that they are very close together for the most part. They are very close, like here to here, it's not that far. Here to here, it's not that far. Now, I hit some space right here. But once you hit this one isn't that far behind it, then that one. So it does kind of like between this one and this last one. So that'd be 1, 2, you count. I'll just delete this one. They're so close together. 1, 2, 3, 4, 5. So it's 5 pivots, 5 or more. 6, 7. This 7th pivot is just like super far. It's $2 from the 6th pivot. It might not get to there. It might just go 1, 2, 3, 4, 5 and stop. It might not even go to 6 because these first 5 are very close together. From 3 to 4, it's like what, a dollar move, but for the most part, it's not too far. You know what I'm saying? Whereas it's kind of far to here. All right. So basically, that's the reason why we're looking at, or why I'm looking at, pins for a pivot machine gun. It kind of has just been going up. It hasn't really had too much corrective activity. So it's probably about time it pulls back a little bit. All right. So I just wanted to go straight to the daily, but if we look at the month is red. All right. So it's red because the close or where it last closed is lower than the open. All right. So the price right now is lower than where it opened. So the month is red. The week is green right now. All right. This past week was green. Even though it was green, you got to think the month started on Thursday. So that's why it's red. So from Thursday, this is when the new month started, to now, the close is lower than the open. All right. So right now it's red. So continuity for the month is to the downside. We got to see what the new week brings. But basically, if it breaks below here, this is our entry. All right. So let me edit the properties. Entry puts daily. All right, gotta change that. All right, so and another thing, you don't have to, as soon as it break above or below the entry, you don't have to immediately jump in. And if you do immediately jump in, just know where your stop is at. You might get stopped out a few times before it really goes. Sometimes it may not go at all. So keep that in mind whenever you are hopping into positions. You know, the thing about it is we have, for the most part, tight stop losses. You know, you're supposed to so price target one. You're supposed to have tight stops because it's about risk management. Now, sometimes having tight stops may not, you know what I'm saying, make sense in certain situations. You might just want to go with like, 20% or 30%, whatever it is that you want to do. But the thing about this is you can always re-enter. Don't let it go too far against you. Don't let it pop up, because like a few things from the watch list last week triggered and then dropped back down. Like, for instance, Uber triggered. I hopped in Uber. It started going against me. I hopped out. You have to hop out and just wait for a re-entry. Don't think you got to take it immediately. You might just wait till the next. If you feel like you have to wait for confirmation and it isn't just getting too far away from you, if you want to wait for that next 5-minute candle to form, if you're looking at the 5-minute, or, you know what I'm saying, you might want to go down in time frame, like wait for the next 15 to form or something like that. Do that. But the thing is, when you enter, it's about knowing, you know what I'm saying, where your stop loss is, what percentage, if it break below a certain level, keep that in mind. All right. Because it's all about risk management with this. And that's why I love the strat, because it's about risk management. You want to cut your losers quick and let your winners run. All right. You might be stopped out a few times. That's okay. All right. It's okay to get stopped out. Just look for a re-entry. All right. Just look for a re-entry. Your price might go and it might do a TTO. It might have a pullback, right? Like, for instance, this could have been considered a TTO right here, right? So if I go down to like the hour, this right here could have been considered a TTO, right? Triangle you out to the downside. It's an ugly triangle, but it knocks some people out their position just to come back and go back up. All right. There's some better examples, like this right here was a triangle to the downside before coming back up and forming a triangle. This right here initially was a triangle to the downside. I was kind of like scrunch it together. Oh, well. And then it comes back up. So it knocks some people out before coming back up. Sometimes that's going to happen. All right. That's going to happen. When you see it reverse against you, cool. Like, so if you were running this up and you were like, all right, that didn't really reverse against me. But when you saw it do this 2-1-2 against you, boom, you out. You secure whatever profit you probably have from here to there. You wait for your re-entry, boom, boom, boom. You got your re-entry right here, 2-1-2 back to the upside. You see what I'm saying? So it's okay to get knocked out the trade or to take profit when it's doing a TTO. Look for re-entry. All right. Take some of the profit off the board, re-enter. If you're just hopping in the trade, take that little, you know what I'm saying, 5, 10, maybe, I don't know how big you are, 100. You might have to take that little loss and then hop back in it. And then it really starts to go. All right. So, and as far as the hour on this, an earlier entry for puts would be right here at the bottom of this on the hour. If I zoom in, I'm at the try not to make this video too long. All right. So you got a shooter right here on the hour. So if it does drop below 79.15, you have an earlier entry for puts. Also, like again, hold on, early entry puts. And then I got to look at the 4 hour. But again, no buys. If it breaks the top, then just hop in calls. You know, we're kind of looking for reversals more so than continuations. That's what I'm trying to show y'all, have a higher probability trade. But if it breaks above, you might have your entry. I just really say entry. I don't need to put, for calls, entry hour. If it breaks above and continue, play the continuation. And the continuation, this be your first price target. You know what I'm saying? Because I just got to walk y'all through the whole thing. PT1, you know what I'm saying? Hour. PT2 hour. Oh yeah, I also need to change them to green. I like to have my price targets for calls green, price targets for puts red. That way I know. So you see what I'm saying? If it continues, hop in the continuation. And then you know what I'm saying, you could come up with more. And then you can go right here on the day and just keep walking. Well, this is the 4 hour. But you can, put right here for the next price target, then there. You know what I mean? And as far as early entry for puts on the 4 hour, see the entry for calls on the hour and the 4 hour the same. So you could say, early entry puts 4 hour. Boom. All right. And as you can see, boom. And that's how you do it. Super simple. Super, super simple. If it breaks above it, hop in. If it breaks back below it, you can say, all right, I'm going to hop out. I just wait for it to go back above it. I'd rather break even. You know what I'm saying? You might be looking at your phone for a little minute, but hey, it is what it is. That's why I try with my trade ideas to kind of set them up to be more for swing trades and stuff like that. So you have some time, stuff like that. But some of these, like before, where like Facebook, I had Facebook puts, I think 619. It was puts for the first hour. After that, it's been calls for Facebook's ever since, basically. So you know what I'm saying? Make sure you play both sides. This watch list, even though I might be like, oh yeah, calls for this, puts for that. If it goes and things change and it's no longer calls, it's no longer calls, then that's what you play. You play the puts. You know what I'm saying? We play both sides. We play puts too. All right. So this is what the broad information is looking like. I just drew it on the day. You could draw it on the day, on the week. As you can see, it's mostly looking the same. I didn't draw back from here. The reason why I drew from here, because it went up and then reversed. Like I told y'all, the easiest way to look for the bottom and the top is to look where price reverses. And so as you can see, it did a 2 up, 2 down reversal, came down, started coming up, then did a 3 bar, a 3 reversal, 3, and then continue basically down, then reverse right here. So that's the easiest way to look for the tops and bottom of the broad information. Just look at where price reverses. As you can see, this is the top, it reverses, drop from this high back to this lower high, came down, it did a 2 down, 2 up reversal. Boom, here's your low. And then just drop back to here. You see what I'm saying? Super easy. That's the way I'm starting to teach, the easier ways to find the broad information. Because like I said, you don't know it's the top or the bottom until it's reversed. I could draw the top from here back to here, but if price does continue going up, then that technically wasn't the top. And your broad information acts as your support and resistance. So for this probably just be a weak trade for pins, because it's just a pivot machine gun on the daily. It looks like the last price target might be here. So it might be just doing a corrective activity. It might go 2 up, 2 down reversal, do like a hammer candle just for it to go two up again. Kind of like right here, 2 up, two down reversal just for it to go two up again. So it might be doing some, a TTO corrective activity right here, right? All right. So the contract that I would be looking for on pins would be one, not for this week. I do the July 16th instead of the 9th, unless it's a higher open interest here. I mean, there's some open interest. It's cheaper. If you wanted to go with one of these cheaper ones, you could do what's higher. So how you can do it is basically, pick that when it hits your price target, which I'm thinking at least it'll get to the fifth price target. Pick something it'll be like in the middle of this, right? So when it hits your price target, you in the money. So if it drops to 75, it's 74. 74. So you could either do the 74 to be cheap or the 75. Or you can give yourself an extra week and go like right here where there's 2,000 open interest on this 75 and get this for 40. Hold on. Get this for basically like 63. So you can do the 75 puts, 716, or you can, do the July 9th, again. So 74 wouldn't be in the money. So yeah, basically like do 75 or like 76, which it looks like still 75 would be the best. 75, 79, or 76, 79. All right, on to the next one. All right, so the next still got DraftKings from last week. All right. I'm surprised I kind of kept DraftKings. As you can see on the month, still inside month, which DraftKings might actually end up still being it. So how you can look at DraftKings, it was caused, but like I said, we play both sides. It's looking more like puts right now. Here's the top of the broad information. It's looking like puts. If it breaks below, puts. If it breaks above, because it like right here, it triggered the price target for the week and then dropped back below it. And then boom. So in the week, your entry for puts is going to be it looks like 50, 57. All right. Then, entry for calls. Entry week. No, your price target. PT. First price target for puts is going to be 47 for the puts for DraftKings. That's probably might be as low as it go. It might be setting up for, corrective activity as well, where it just hits right here, forms a hammer to keep going back up. That'll be your TTO. And then let me see what this is for the month. So you got puts. So basically everything is still the same. So with what I drew last week for DraftKings was if it breaks 56, that's the entry for calls for the months for to do the 2-1-2 reversal. All right. So let me pull up this strat resources doc so y'all can see what I'm talking about. So again, on the month, we'll be looking for a 2-1-2 reversal. All right. The entry for the month would be here. The first price target would be the top of this candle. All right. If it does trigger for calls. If it triggers for puts, trigger a 2-1-2 continuation, which would be here, right here, this 2-1-2 continuation. Entry for puts on the month be 44. Let me go ahead and mark it. First price target PT1 puts month. All right. And then for calls, PT1 month. All right, boom. So your price target, if it goes 212 reversal, right? So if it breaks above 56, as you can see right here on the cheat sheet, combos, 212 reversal. The entry is at the top of the one. The top of the one is 56. First price target is the candle right before, which is the month of May's high. So boom, 58. For puts, continuation, entry, right here, month 44.65. Price target 1 for puts, month 39.93. All right, simple. If it breaks below it, enter. Your price target, boom, mark the high and low. You know what I'm saying? Mark the high. If it breaks above it for calls, which the price target, as you can see, 58.32. If it breaks below it and it's a 212 continuation to the downside, boom, your price target is 39.93. Your entry is 44.65. Back down to the week. As you can see, I think I drew this broad information on the daily. And like I said, it's from last week's video. So you just got to watch that over. You know what I'm saying? Watch that. But as you can see, boom, for the week, if it does break below, the price target for puts is 47. So again, entry for puts on the week is 50, 57. First price target, 47.02. Again, when it comes to choosing contracts, basically just try to be, when it hits your price target, try to be in the money. I'm not going to go all the way through the contracts right now because this would be like calls or puts. So for this, choose, like I said, generally try and get something that will put your contract in the money. And then on the daily, if it breaks below right here, same entry for puts on the week. If it breaks below, it continues, boom. For calls, your earlier entry could be right here at the top for a 2 down, 2 up reversal. So your 2 down, 2 up reversal, entry, target. So the entry is here. The first target actually is the target for the entry for the week for calls. And then, you just keep, going backwards, adding price targets, which is profit target, basically. All right. So here, entry, daily, boom. And then you can go down to the 4-hour, see if there's going to be an even earlier entry, which it is. You have an inside candle, mark the high, mark the low. You can go, let's see. Entry, 4-hour. Like I said, y'all, it's super simple. Don't make it any harder. What's going to happen is the next candle going to come tomorrow, and whichever direction it break, you know what I'm saying? Try to wait at least 15 minutes to see what the market actually really doing. But sometimes they really just start dumping. All right. Sometimes when you wait, it was a smart decision. Sometimes when you wait, that thing is gone. It is completely gone. So that's why you have to manage your risk. And then entry puts 4-hour. And then if you want, as it hits the next entry, so you have your entry for puts on the 4-hour, you can boom, hop in. Then when it hits the puts for the week, you can add. And then, you know what I'm saying, as it keeps going down, you can keep adding if you want to, as it, 2 down for puts on probably like the 15 minute or the 30, you can look to add. And then for calls, same thing. All right. Next thing, Uber. Uber on the month, setting up for, a 212 reversal or a 212 continuation. Remember, mark the high and low, entry, so you know. I kind of went over Uber, I think, last week. I think Maybe it looks like I didn't. Entry month, right? So on the month, again, if I pull this up, 212 reversal. So the entry is here. First price target is going to be here for calls. First price target is going to be there for puts. All right. So boom, change this green. PT 1. Oops. PT 1 puts. Boom. All right. Then we go down to the week. The week is a hammer. The same entry for the month is the entry for the continuation on the week. All right. So we don't even got to do nothing for the calls aspect. For puts, if it breaks below, again, no bias. We just pick the side that it takes. We're not predicting. We're just like, all right, if it breaks this way, I'm in. If it breaks the other way, I'm in. If it breaks against me, I'm out. If it, was calls and then turns to puts, well, now we switching from calls to puts. We are like dittos from Pokemon. We just shapeshift into whatever, is in front of us. Or a chameleon. You know what I'm saying? We're not trying to be a fucking Einstein. Probably shouldn't cuss. We're not trying to be a freaking Einstein and be like, oh, I knew it was going to break that way. We're not trying to predict the market. All right. You don't get money for predicting the market. All right. People don't be like, oh, you predict the market, right? I'm going to give you some money. You don't get no money for that. You get a cookie and maybe a few followers, but eventually you're going to be wrong and everybody's going to be cussing you out. So it's best just to not predict, take what the market gives you. It's just like basketball. You just take what they give you. Now on the daily, all right, entry for puts is going to be 50.39. So you got an earlier entry for puts if it breaks the other way. Entry, puts, daily. All right. For calls, it just be like if it does a 2-2 continuation. So if it breaks above that, boom, you can go ahead and enter entry. Because now it's directional, it's a continuation. Boom, you could go ahead and hop in it. All right. Matter of fact, let me go back to the week and draw the broad information. So my broad information, how I would draw it, it's going to be, because this is a low, it reversed, boom. And then from here, it's one from here to here. It's pretty sharp. This must be the wrong. Oh, that is the max. Or you can do like here to there, which is a little bit better. I like, because it came down, went back up, came down. So that could be the high. Because this one's kind of like not the best top. This kind of gives you more of an overview that there was some resistance here because it touched, went down, touched, went down. All right. Remember, your broad information is like your support and resistance. All right. Then on the daily, boom, you see. So that, then you can go down to the 4-hour, see if there's even earlier entries, which for puts, the entry would be below here. Oops, got to change my drawing tool. Boom. And you say entry puts 4-hour. It's literally this simple. The candle form and it breaks below. All right, boom, puts. Breaks below might add some more puts. Breaks below might add some more puts. And then, you just would be marking your price targets. Boom, boom, boom. See what I'm saying? It's not that hard. It's not complicated. It's not rocket science. If you taught your 10-year-old, your 10-year-old probably lap you because it's that simple. They're not going to overcomplicate. They're not going to overcomplicate it. All right. Then Disney from before. I know Disney was a hectic one. Disney was a soul breaker. But as you can see, on the daily, and I think on the weekly it's the same. Just look at last video for Disney. We were looking for a 2-1 month. As you can see, just mark the high and the low, mark the price targets. You mark the low, you mark the high, boom. Like I said, on the week, it's a hammer. On the daily, it's a hammer. Again, no bias. You mark the high, and it's an inside candle. So let me remove this drawing. So boom, you mark the high, you mark the low. Puts, entry, puts, WK. Calls above, and this is kind of looking like a Momo hammer. Entry, weak. Because your Momo hammer forms near the close of the previous candle. So even though it's not green, but could be, Overall, it's a hammer anyway, which is actionable signal, and it's an inside candle. So boom. And then right here, you have a hammer. So what Disney was doing looked like it wanted to do the corrective activity. It triggered initially, I believe, right? Did it trigger initially? No, it didn't trigger. No, I think it triggered probably on the day or something. But anyways, Disney is doing what we call the TTO. And here's your perfect example. If it continues up, broke up, came down, knocked people out their position, right? So if I just mark it right there. Oops. Let me remove this one. So boom, you got your triangle right there. So this is a triangle. So this is your first TTO, right? As well as you can say this is a TTO right here. Boom. Came down, knocked some people out their position, right? So it knocked the people who were short out their position by coming up. Then it comes down again, knocks some people who were long out their position up to like right up in here. Then starts going back up. And if it comes back up here, right, and it takes this out, which is the entry for the week, boom, then that's your TTO. So triangle, and if it comes back up here and completes triangle, which it did it right here, triangle, came down, triangle. That's your TTO, all right? So that's what be meaning by, triangle day out, because it forms triangles, it's pullbacks, corrective activity. All right. So I need to remove drawing. All right. Drawing. Verse 23. All right. So boom. So entry puts, entry calls, first price target for calls, first price target for puts. And remove drawing, remark this. Edit properties, price target, puts. Oh, I just said price 31, puts, week. Market, boom. All right. And then up here, that'd be calls, but I ain't gonna change it because, actually I can. Edit PT1 week for calls. Boom. Okay. All right. And then you got your entry for the month for calls. So here's your first price target for calls on a week. Second one is going to be up here. That's the same entry for the month. Price target for puts on a week. Price target 1. And then we go down to the daily. It's doing a hammer. So right now, if it continues up, entry for calls, entry, daily. If it breaks below this, puts, entry, puts, daily. I ain't got to change the color. All right, so boom. You got your earlier entry for on the daily for calls. All right. You got your earlier entry for puts. Then you go down to the 4 hour. Boom. it's already, if it continues down below, but here's your early entry for calls right here with the 2 down, 2 up reversal. Now I know this 2 down ain't red. It don't gotta be a red 2 down for it to be a 2 down, 2 up reversal. Just because it's green, because my white candles are green, does not mean it be a 2-2 continuation. It went down. A reversal is when it changes direction. So if it went down, then went up, that's a change in direction. All right. So it's about changing directions. So it'd be doing a 2 down, 2 up reversal. And again, as you can see, above it is the entry. Again, wicks count. I think the reason why they didn't put wicks on here is because when you're watching this stuff in real time, that's actually what it looks like. It doesn't have the wick technically on the last candle, but on the other candles, it should kind of like be wicks to be like realistic, but I might, fix that. But again, as you can see, entry right here, entry right here. And then your first price target is going to be, right here. So you know what I'm saying? Boom, entry, first price target, which is our entry for our daily for calls. All right. So entry 4 hour. Oops, entry 4 hour. It's that simple, y'all. Don't overcomplicate it. Don't overthink it. You hop in the trade when the next candle breaks above it. All right. Or below it. Super simple. And again, for the broad information, high back to a lower high. Because as you can see, it reversed. Then right here, here's your bottom because it did a 2 down, 2 up reversal. That's kind of like the easiest way to see it. Low, higher low, high, back to lower high. All right. And then we got Peloton. Peloton on the month. It's right now, it's an inside month. If it continues up and breaks above this, it'll be a continuation on the month. All right. So edit properties, entry month for the continuation. All right. If it break below here, puts. Super simple. Entry, puts, month. Just so you know where if it breaks below that, it might be triggering the outside month or it might be triggering puts. You know what I'm saying? A 2 up, 2 down reversal. That way, like Sarah says, to, where it might be if it keeps dropping. You don't want to not know that it just turned the whole month red and it just actually triggered a reversal. Okay. All right. So I'm looking at Peloton for puts right now. But again, if it continues and breaks above it, calls. All right. But if it breaks below it, some puts. So right here, this is a shooter. All right. This is what a shooter looks like. This is a shooter. Shooter is usually, you shoot somebody down basically. So it's shooting to go down. You put somebody down basically. All right. So entry, puts, week. All right. The first price target for the puts is going to be right here. PT1 puts week. Boom. Price target for puts. So that's what you're hoping to take out. It might not take out the whole thing. It might just stop. But sometimes they'll take it out. All right. And then, if it kept going, this would be your second price target. So again, if it breaks below puts, the break at the top is already your entry for month to trigger, what I'm saying, the 2-2 continuation. All right. Then on the daily, it's already been going down. So the same entry for puts on the week is actually your entry for days. But if it breaks above it, here's your early, let me delete this. Here's your early entry for calls on the week. I mean, on the day. Entry, daily, boom. So that'd be your first entry. Let me draw the broad information. So I'll draw it from here back to here. then here to here. And then you also can draw here back to there because it tried to come up. Really, it could be here back to there. So let me activate it. You can change that. And I could just do it like right there. Which right now, based off that, that's probably why it's a shooter on the week, because it just hit the top of the broad information. Boom. As you can see again, broad information is support resistance. That's probably why when they hit in reverse. See what I'm saying? That's why you draw them. All right. So that's your broad information. Go down to the 4 hour, see if there's an earlier entry. It's an inside candle. For puts, I mean, it's barely right there. Let me change the draw tool. But for calls, I'm not going to worry about puts. Puts, the entry for puts on the daily and weekly is like so close to the 4 hour. But right here could be your entry for calls, early entry for calls, because it's an inside on 4 hour. And again, the way you pick contracts is the price target that you have set. You want it to be in the money, basically when it hits. But also, you know what I'm saying, when I post the other list to it, you know, I'll post, you know, potential contracts or whatever. But I don't want this video to be so long, but y'all can see how I pick it. Like, for instance, if I was, let's see, which I say it's probably a bigger, you know, reward for it to drop for puts. So if I was doing puts and I was doing puts on Peloton, as you can see, the volume on puts is high. You know, like I said, it's not really too high on this one. That's why I've been telling y'all go with July 16th. But for whatever reason, it's acting stupid right now as far as the calls and stuff. But on the put side, you know, you can go with the 120, you know, the 118. It's not horrible bid-ask spreads. They're like 12 cents, $12 basically. And on the call side, you know, you can go possibly like, you know, the 130 or basically like the 125. It's only a 10-cent difference. All right. Super simple. I just look at the volume basically for the most part. Or, you know what I'm saying, how much I want to start, put a startup position. I might start super cheap. So I might buy a far out one. Right. But as I would add something that's lower than a far out one. All right. So that's one, you know what I'm saying, one way of looking at it. Then you got beyond. All right. So on the month for beyond, it's an inside month. If it breaks above, you know what I'm saying, that's a 2-2 continuation entry month. That means you have a directional month. It'll be in force, as Rob said. And the reason why he says in force is because if it breaks above, then it's technically a 2 up, right? But if it ends up breaking back below, yeah, it did go 2 up, but now it's technically where the price is, it's inside of the previous range, which means that 2 up is no longer in force because now it's back inside of the previous range, all right? So that's why he says that. Then you go down to the week. Boom. The entry for calls for the week and the month is the same. Puts below. So entry, puts on the week. Is your first price target for puts. Then, you know, if it kept going down, then boom. And then the broad information, that's a high one. You could say up here. Oops, wrong drawing tool. Here, back to here. And yeah, this one's lower. Here, back to here. Or if you wanted to say, you know what I'm saying, that wick was too long, you could possibly do like here to here. All right. Price reversed. Price went up, reversed. Price reversed. Boom. Because again, your broad information is your support and resistance. So this might be where some resistance is at first before it gets all the way back up to there. All right. Then we go down to the daily. Technically, with price reversing right here, you could draw one back from here to here. You know what I'm saying? If you wanted to draw broad information, you could draw from here back to here on the daily, just in case it get back to that range and start back acting funny. You know, it's some overhead resistance right here. All right. So again, super simple. If it and it's an inside day, so you already marked the high and low for the week. For the day, again, if it breaks above, oops. If it breaks above, because it's an inside candle right here. I forgot I didn't put my numbers on there for y'all, but this is an inside candle right here. Matter of fact, let me just add that real quick. Kind of hate I've been doing it without it, but y'all be okay. All right, so boom, inside candle. Entry for calls on the daily. Entry, puts, daily. Oops. All right. Then again, what you're hoping for usually, like especially like with reversals or even continuations, you're basically hoping that that lower time frame triggers that higher time frame. That's what we're looking at. We're hoping the lower one triggers the higher. And that way we get the earlier entry, we get the earlier jump for the longer term trend. You understand? All right. And then we go down to the 4 hour. And then we see, you know, for push is basically almost the same, but for calls, here's an earlier entry on the 4 hour. And then you can go down to the hour. I'm not going to worry about going all the way down to the hour. Because again, y'all should understand the process. This is like super simple. Like think of it just super simply. This is what helps take out the guesswork, that helps take out the emotions. Because when you're like, I think it would do this, I believe it would do this, you're trying to predict the future, right? And a lot of anxiety comes from trying to predict something that you have no control over. Like it's easy to predict that you're going to go play basketball today. You have control over that. If everybody hooping, you can be like, I'm going to go to this part and I'm going to go hoop. Easy. When you're relying on something that you have no control over, like the stock market, that's where the anxiety comes from. Like, I hope it's going to do that. I really hope it's going to do that. I hope it does this and it doesn't do it. Now you're driving yourself crazy. That's why we don't predict. We mark the high and the low. We look for the earlier entry, the earlier reversal or continuation if it continues, or it might be a reversal into a continuation on a higher time frame. That's what we look for. All right. We make it simple. We take the guesswork out. So boom, that's beyond Roku. And then one more after Roku. Let me clear all this out. All right. So on the month for Roku, inside month, if it breaks above this point, it's going to be a continuation. All right. Entry calls. I'm not going to worry about marking puts on this one because for Roku to go to reverse in July, it's going to take a lot. From 430 to 324, that's a long way. It take August, you know what I'm saying, to August to do that. So we're going to go down to the week. On the week, let me go ahead and draw the broad information. Back to here. Back to there. All right. Goes up, reverses, boom. Comes down, goes up, reverses, boom. You could have said you had a broad information here. Clearly it's broke above that. All right. So if it really does reverse right here on the week for Roku and it keeps going down, then this would be the new high for the broad information from the top of this back to here. All right. Go down to the month. Go down to the day. As you can see, it already did a 3-1-2 reversal. All right. So on the day, you know what I'm saying, your first price target, if it continues to drop, Roku does, is 420. All right. And then after that, 406. So our entry for puts on the daily is once it breaks below that. I didn't mark it. I don't know. I got to mark it for the week puts daily. All right. Go back to the week. Yeah. So basically the entry for the daily and the week is the same. All right. And then, calls for the month and calls for the week is the same. Go back down to the daily. So boom, if it break below, continuation to the downside. If it breaks above right here, this would be, on the daily, this would trigger a 2 down, 2 up reversal or a rev strat of 1-2-2. Entry, calls, daily. Boom. And then, your first price target be up here for the calls on the day. All right. Go down to the week. Go down to the 4 hour. I'm tripping. Go down to the 4 hour. You have an earlier entry for calls right here. Entry, calls. I don't even got to put calls. Entry, 4 hour. Change that. All right. So your entry on the 4 hour for calls is break above 436. Then if it triggers the day 445, you can, like I said, add. On the 4 hour, your first price target would be right here, which is the high is 457. If you look right here, 457. And then the next price target would be, where you would enter calls for the weekend for the month. All right. Super simple. QCOM is the last one. Again, go back to the month. It looks like it might do a 2 continuation if it breaks above. Messed it up. Move drawing. Boom. If it breaks above it right here on the month, that's a continuation. So it'd be entry, calls. Entry. More, it's calls. All right. So if it breaks above it, boom, continuation. Week. If it breaks above that point, that's a 2-2 continuation. If it breaks below it, entry puts for the week. All right. Just so you know where your triggers would be at. And then, right here would be the first price target. Now, if we go to the daily, it is an inside candle on the day. So you mark the high, you mark the low. Entry puts daily. Entry daily for calls. Boom. Because this could be in your TTO right here. Triangle day out. And then now it's about to go back to the upside. All right. But if it keeps dropping, first price target, second price target, third price target. All right. 4 hour, earlier entry for puts would be right here. Entry puts 4 hour. And again, this is super simple. If it breaks, it breaks. If it don't, it don't. Whichever side it pick, we take. If it don't pick a side and it consolidates, we don't even worry about it. All right. This is how you make all these things happen. This is how you build your watch list. All right. So literally for the week, I think it's 1, 2, 3, 4, 5, 6, 7, 8. One of these gonna go. But if none of them go, none of them go. You just, by Tuesday, Wednesday, you be like, it is what it is. I'll, find something else. All right. But again, this upcoming Tuesday is when your month, week, day, and 1 hour on the second hour Tuesday uncouple. Why? Because your month started on Thursday. Your month and your week now have a separate opening come Monday. All right. Come Monday, your month and week will have a different opening. All right. Because Thursday was your month's opening. And you know what I'm saying? Thursday, the week, last weekend, and basically the month had the same opening. All right. Well, they actually had different openings, but it was, June's month with July's opening. But this upcoming week, you'll be able to see the separation between the month and the week participation groups. All right. So your month open is Thursday. If you want to go mark the month open for Thursday, go mark it. Thursday was the day that the new month started. All right. I said Monday, Tuesday. I'm tripping. So technically Tuesday is when your month and your week will uncouple. I'm tripping. Your month and your week will uncouple. I forget today is Monday. Your month and your week will uncouple. All right. Then Wednesday, your month, week, and day, 1 hour on the second hour Wednesday will all have different openings. So now you can see, your scalpers, participation group, your day trader on the day participation group, your weekly participation group, and then your monthly participation group. All right. They'll all be separated. So again, thank you. For the people who care to, tip me or whatever, everybody that was on my Instagram was, asking that I make a tip jar. So the link for that will be below. My Twitter and Instagram will be below. So yeah, follow me on Instagram. I go live, when I can, to answer questions and stuff like that. So you can catch me on my Instagram. If you need one-on-ones and stuff like that, that link will be below. If you want to get the blueprint course, that'll be below for how to, use Thinkorswim and stuff like that. I plan on adding to it here soon within the next week or two. Again, thank you. Follow me on Instagram. I appreciate you all. Have a great trading week. If you need anything, just message me. Again, I'm Ray, the Strat Uchiha.